Hi, welcome to this video today. I'm just talking about how to trade Forex like a casino. Now, I've seen plenty of videos on this subject, and they make the very valid point that casinos know their edge against people who come into them. Okay, their edge is going to work against the players. Okay, the majority of players who enter a casino are going to lose. Same in the Forex markets. You can see it as a big casino. There are certain big players who are the casino operators. They're going to take money off the vast majority of beginners, retail traders. Okay, now in terms of most beginners, when they come in the markets, they do not understand how the big players operate. Once you understand how they operate, you can basically avoid them taking too much money off you, and also work out an edge where you can actually trade like a casino. You'll know the edge and you know it's going to work longer term. Now, in terms of how the big players operate in the market and how to develop an edge, we're just going to go to a storyboard and go through the key points that you need to know to win at Forex trading longer term. Right, let's have a look at three groups that operate with an edge in the Forex markets, and they aim to take money off retail traders, and they're very successful at it, and there's a lot of money to be had. 15% of the volume in terms of Forex markets is actually now retail traders. Now, in terms of number one, it's Forex brokers. Now, what is their edge? Their edge is that 90% of traders are going to lose their money. So if they're market makers, they will basically bet against the client, take that money into their account. Every million, they'll get 900,000. It's a great business, isn't it? Now, in terms of a lot of beginners, when they come in the markets, they believe that they should trade with ECN brokers because ECN brokers have got no conflict of interest with them, i.e. they're not betting against them. If you are a small client trading with an ECN broker, probably let's say with under 100k, your ECN broker's probably got deals with market makers behind the scenes. They couldn't survive on PIP income, okay, on a $5,000, $10,000 or $20,000 account. So, yeah, you just accept your broker bets against you. That's no bad thing. It's up to you to beat the odds. Yeah, Forex brokers do give generally an excellent service in terms of platforms, spreads, etc. Okay, what they will do though is they will encourage traders to lose money. Okay, now in terms of this, how do they do it? Well, basically I'll explain why they do it. Yeah, sure, they can bet against the client and take their money, okay, but obviously they want to make as much money before the majority of retail clients lose their money. So they want to make even more money. How do they do it? Well, they'll give more leverage than is needed. We all know that leverage is a double-edged sword, and it has come down recently in certain jurisdictions, but still way too much. Most traders come in and over leverage. Brokers know this. And the bigger the position size, the more they make on the pip spread. So, it's more income for them. As one broker once said to me, give them enough rope and they'll hang themselves. And most retail traders will. Now, in terms of research and education, most of it is laughable from brokers. They say, speak to our analysts or listen to our analysts, trade like a professional. You don't want to do that because obviously if they could win, they wouldn't be brokers. Also, the education is generally slanted to make beginners believe certain myths and make them lose. So, for example, they'll promote day trading and scalping. It doesn't work. I've said this in numerous videos. But again, it increases the PIP income. They'll talk about patterns and so forth and how you can make money with those. A good site to go and look at for education for broker is fxdaily.com, which is I think owned by IG Index. It just basically promotes so many myths. Also, brokers will do copy trading. So what they'll say is, if you're a beginner, why don't you follow our best traders? Now, their best traders are normally the people who've made a large amount of money in a short period of time, so they'll show you them on the platform, then you go and follow them, then you're probably going to lose because they probably did so well because they were over leveraged and got lucky. Okay, so I think, in terms of the edge of Forex brokers, what you can learn is that you must not use too much leverage. You mustn't believe that you can follow tips, advice, other people, and also do not go for strategies that plainly are not going to work. Okay, now next we've got the Forex educators, and in terms of Forex education, it's a huge business, and most educators involved in Forex are not there to promote strategies that work. They're there to promote strategies that are going to appeal to greed, naivety, and if a beginner or an inexperienced trader takes these strategies, then they are basically designed to maximize the round turn lock commission back to the educator or the CPA. And this is big business. Most educators are very linked in with brokers, and they can either choose having a percentage of the trading commission or the spread, or then get a CPA, cost per acquisition. And that varies between brokers. $500 is pretty standard if a new account is opened by the broker that's referred by the educator. You can even get, with some brokers, up to $1,500 a client. Okay. Now, in terms of this, I saw quite a well-known Forex educator, and I looked at their commission income from a broker, several $1 million. Okay, the strategies are there to basically appeal to myths and greed, and you get a lot of day trading strategies I've already mentioned, short-term scalping. Most popular at the moment is pattern strategies, where patterns are supposed to repeat going forward. I've said it on numerous occasions. These strategies do not work, okay? But they make it look like anyone can trade Forex, okay? Which isn't true in terms of anyone can trade Forex, okay? But you've got to do the right things. It's very easy to come in and think these strategies work with fixed rules and so forth. They don't work, and neither do automated trading programs. They've died down a bit recently in terms of promotion. Now, what else have we got? We've got another group, very important: banks, big funds, and what are called HFTs, high frequency traders. And these funds, okay, they are deliberately looking to get the retail trader. Okay, so what do? They know that most traders trade short term, so they will basically push prices towards levels that are obvious to put a stop behind, okay, and take the stop cluster where all the retail clients put their stop. A lot of traders complain, it was my broker picked my stop and the price went back the other way. That didn't probably happen at all. It was probably a fund or a HFT. HFTs, I've done a full video on them. They basically are lightning quick, okay? And they can push the price around a lot in the short term. That's why you get so much noise, and my day trading and scalping doesn't work. They'll also get involved in what's called suck and dump. Okay, so let's say you've got non-farm payroll. Retail traders, they'll tend to want to buy if the payroll number is better than expected, or sell if it's not, okay? And these funds, what they'll do very often is, let's say the payroll number is a little bit better than expected. They'll come in and they'll buy. They'll pull the price up, they'll pull the retail traders in, and then they'll dump the price back down, take out the retail trader's stop, because it's normally going to be too close, okay? So the Forex market's very noisy, okay? And you've got three groups who are basically taking money off retail traders. And what it's telling you basically is you don't want to trade with too much leverage. You want to basically work out your own strategy, okay? Don't take anyone else's. You can take ideas, but you've actually got to get a strategy in place that suits you, and it's got to be based upon the logic of the market movement. The market is not scientific. It doesn't move to pretty patterns, okay? All those strategies are junk, and I've said this frequently. If the people who promoted their strategies, short-term strategies, pattern strategies, could actually make money with them, they'd give you their trades in advance. They never do. It's all hindsight or vague advice. And also, in terms of getting an edge, you don't obviously get the same edge as the people we've just discussed. Avoiding their edge is telling you basically what to do. What you need to do is get an edge against the market, or the casino, so to speak. And you can learn a lot from people who've actually traded and beaten, or not traded, played and beaten casinos, then transferred their knowledge into financial markets. And perhaps the most famous person to do this was Ed Thorpe. He basically wrote the book Beat the Dealer, which was to do with blackjack, showed you how to get a statistical edge over the casino. He then went on to the financial markets and basically became one of the most successful traders of all time. There's plenty of other traders who did well, or do well, who basically learnt their art in the casino. So another one would be Blair Hull. Now, in terms of getting an edge, I've just gone through briefly how to get an edge, but what there will be is a part 2 of this video in terms of specifically refining the edge. Okay, you know what not to do, which the majority of beginners are going to do. And if you basically learn what's in this video, you'll learn more than most traders, and then it's basically about getting your own edge, which we'll cover. Part 2 of this video, you can also look at videos in our playlists in terms of the best strategies to use to get the odds on your side, and also a trading edge. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.